Today, ladies and gentlemen, we're going to look at the six-figure portfolio. We're going to analyze some real estate because Ben Mala from the YouTube channel Concrete was here in my hometown, Canada, Toronto, which is going to be something fun to look at. We're also going to analyze the sin stocks and then also how to plan kind of an early retirement because a lot of you don't seem to fully understand how this works. So this is a lot today, guys, and I wanted to put it all into one video instead of dividing it into multiple videos. So I hope you enjoy this. Consider slapping a like because this takes a lot of work. Let's jump right into this. Welcome back, passive income investors. My goodness, we got a lot to go over today. I posted a really fun video yesterday. You guys didn't really seem to care too much about the retirement savings plan accounts. I just realized that you can use a retirement saving account to actually take out a mortgage on a property. I'm doing a meeting on Tuesday. I'm going to break more of that down, but we got a lot to go over. We're going to look at sin stocks, real estate, Canadian banks, early retirement, including my six-figure portfolio as well, guys. So we're going to head on over to the computer. I got lots and lots we're going to go over, so let's just head on over. All right, guys, we got a lot to go over here, but we're going to briefly analyze through the stock portfolio. I think it's sitting at around $109,900 as of this very moment, which is down a couple grand from a week ago. We're going to go over this Ben Mala, a quick interview. I'm just going to look at a piece of it because he talks about my hometown, Canada, here in Ontario. He's talking about Niagara Falls and Toronto, and I come to realize that a lot of you that live in the U.S. probably don't know a whole lot about Canada because he sounds like he really doesn't, and I think this will be a fun way to finish this video up, so I'm going to come back to that toward the end, that little fun interview clip, but I want to look at the stocks that are doing horrible in the account, why the account has been trending downwards, and we're going to talk about the biggest losers because there's been a lot of crazy news going on that has been affecting the sin stocks, the Canadian banks, and that's the stuff that I mainly want to focus on. So I'll show you the two accounts. If you're new to this channel, I update my accounts almost every day. Just talking about the stock portfolio. So this is the regular trading account, and I have a tax-free savings account as well. And some of my plans is I want to start shifting my tax-free savings accounts holdings around, like Apple. When this gets up a little higher, I wouldn't mind getting about $8,000 out of this and putting it toward another dividend payer. But I don't want to focus on the account today, guys. You can go check that out in a past video. Today, I kind of want to focus specifically on the stocks that just aren't doing that well and why, because there's so much interesting news. So what we're going to look at first is the Canadian banks. Canadian Imperial Bank hitting some fairly high lows. So we're going to take a quick peek here. We can see we got more bears than bulls, and if we look at like a 6-month chart, we can see that we've been relatively flat from 6 months ago. We kind of keep hovering down toward this low end area. If you wanted a good swing trade, now might be a good time to pick up some shares. But this is, again, this suppression of these banks, considering I think the Royal Bank is the most shorted bank in Canada, has to do with this article here, kind of explains over this. This is the juicy 5% yield, a poor investment. I don't personally think so at these levels, but Canadian banks continue to attract considered negative interest, with the largest mortgage lender, Royal Bank of Canada, ranked as the most shorted stock on the TSX. Most of the negative attention is from the U.S. hedge funds that believe a sharp decline in the quality of credit looming. And this has a lot to do with the fact that I talked about this when I went over the banks, is they've been increasing there's that term. What's that term? It's in here somewhere. Essentially, they kind of mitigate debt loss by actually putting money aside in case. It's called loss provision, I think, debt loss provision. It's right here. While provisions of credit losses rose 13%. So this is what people have been getting really fearful about, is because they've been actually putting money aside in case something happens, because the real estate here is expensive. And if we go into like a real estate recession where the real estate prices start dropping heavy, we could see the banks really affected by this. But they are mitigating it. It's not like 2008, guys. It's a little different today because we understand how, the past may rhyme into the future, and Canada has been an exemplifying country for Canadian banks. We have one of the greatest banking systems in the entire world, and I like the fact that they're mitigating this risk. They're actually aware that, these could be problems. They're kind of trying to diversify. They're trying to ensure they have capital in case, they're planning for the worst. I went to school to be a pilot. I used to do pilot training, and usually one of the sayings is you always prepare for the worst case scenario, so you always know what's going on. And they didn't do that in the U.S. when 2008 came, but Canadian banks, they seem to be doing okay, and they prepare. So I'm confident that they're going to do okay. Right now, there's just been a lot of, again, even if they drop, they're going to come back. They're not going to go anywhere, guys. They're banks. Banks are banks unless Bitcoin comes over and takes over. You can't say much about it, guys. So I'm going to continue holding. I'm not buying more at these levels currently. Imperial Bank and a lot of Bank of Nova Scotia, and I actually want to leverage down in Canadian Imperial Bank. So if this comes up at all, back toward closer, maybe not as high as my buy price, but I wouldn't mind pulling out 3,000 or 4,000 again to start buying some other companies just to diversify my tax-free savings account a little better. But I'm sitting holding tight, collecting the dividends. This plays a really healthy dividend right now. Obviously the 5% that I think they just mentioned, 5.4%, and they have no problem paying that. So I'm not going to worry about it. I'm just going to sit here and collect the dividends. Now I really want to talk about something you guys are probably more interested in, which is the sin stocks themselves. The sin stocks have been really under fire lately, especially MO, which makes me really want to pick up some more shares in it because now it's actually below my average buy price. All right, so looking at Altria, we can see we got no bulls. Everyone's a bear today with Altria Group, paying out almost a 6.5% dividend yield, just over that. We can see we've been on a major decline still. MO hasn't been able to catch back up, and it continues to fall. The 3-month chart, the 1-month chart, everything says negative, 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 negative. And honestly, that doesn't bother me. Why did I just lose that? Let's get back into here. So 5-year chart. This company to me, guys, is like, I love it, I love it, I love it. But what's going on is the banning of JULL. If you don't know, Altria Group has positions in JULL, billion-dollar positions in JULL, Cron. No one ever talks positively about the tobacco stocks ever, and lately they've been on a decline because they haven't been able to cover from the 2018 kind of recession that happened there when we had that big crash in 2018. This stock just kind of kept going down, down, down. The fundamentals actually haven't changed that much, and I think this is in a value basket, and I love buying it at these levels, and I'm going to continue to. But do I think they're going to ban JULL? It's kind of weird because their actual headquarters are in San Francisco, where they want to get rid of JULL because it turns out 20% of high school students are using vapes. It's kind of wild to say that, eh? And I laughed at a funny comment in the forums. A guy was saying, okay, so if we ban vapes, they're just going to go back to smoking cigarettes, which is a reality, guys. A lot of kids smoked when I was in school. I smoked when I was a teenager. And I don't think banning it's going to help. And JULL made a crack at this saying, well, what are you going to do then? Let smokers that have mitigated ways of quitting smoking? I used vaping to quit smoking as well, guys. I used to smoke. Vaping actually got me off smoking. I switched to vaping. It wasn't nearly as good. I like cigarettes more, but it stopped me from smoking for a whole year. And then I gave up vaping because I just didn't enjoy it as much as I enjoyed smoking, but I didn't feel the addiction need to want to get a cigarette. So I actually used vapes to quit smoking. So I'm 100% for vapes. I love them. I get them. I don't vape anymore, mind you, but I love the tobacco companies. And honestly, does San Francisco end up actually banning tobacco or these heated products? I don't think so personally. I think they have a problem, but like JULL said, or JULL literally was just like, okay, well, why don't you go look at the initial problem? Like, why are kids being able to get these underage products? Isn't that the real problem? So why don't we look for that solution instead of just banning the end product for no reason when it actually helps people? But this is the news that's specifically bringing down JULL today because there's not a lot of regulation around this stuff yet. And man, Altria took a big risk by buying a huge percentage of this that cost them billions. But again, guys, there's a lot of kids using these, and I think there's more kids using these because they think that there's less risk than tobacco. So you might be getting an overextended amount of children trying this product. Do I think that's a good thing? No. But it falls under the sin stock, guys. There's a certain morale that comes with owning these companies. If it doesn't fit your own morale, don't worry about buying it. It's not a big deal, guys. But I'm going to keep buying it. I don't think this stock has seen its day yet. I think we're going to see a wicked recovery at some point. I think we might even be seeing the bottom here. I don't think it's going to crack the last lows it made. If it does, I'd be impressed. But if it does, just another buying opportunity, guys. But I think we're going to hit a flat toe here, and we're going to start seeing an uptrend over the next couple years. Might be 2 to 3 years from now, but I just don't see much happening here. So I would just take the dividend, focus on that dividend and collecting that, and just stay away from the equity. Because honestly, I don't think there's much more downside. Again, I don't think you're going to do any wrong, guys. But moving on here, there's just one more thing I want to throw in here that I found really interesting. I'm watching a lot of YouTubers talk about like planning for their retirement, and they go into these retirement calculators. I'm going to use Wealth Simple because this is a YouTuber that I watch frequently, and I haven't actually noticed that he has a wealth calculator, a retirement calculator on his thing. So let's presume that my average YouTube age group is around 30 years old, maybe a little younger. A lot of you seem to be in your 20s as well. And let's say we're not making $50,000 a year. Let's just say we're making, on average, usually I make around $40,000 a year. And I have in savings, let's say $110,000. You are all set. So by the age of 65, I plan on having about $1 million. What you'll have if I'm putting again about 50% of my income away, I think. How does that? 500. Oh, this is if I'm putting $500 a month away. Oh no. We're putting like at least $1,200 a month away. usually. So let's just say 1,200. So I'll have 1.94 million if I keep doing what I'm doing until I'm 65. But oh my God, guys. 65? Are you kidding me? Are you kidding me, guys? I want to retire long. Not that I want to retire long before 65, but I want to talk about why you shouldn't use these to gauge a retirement plan. It's so horrible, in my opinion. I've been watching so many of you YouTubers out there go on about how you're going to have to work your asses off. Even PPC Ian, there's a few other guys that I watch all the time that go on about, this is when they're going to retire, this is how much money we're going to need, it's going to need to be $1 million, you're going to have to make 6% or 8% on that million, you're only going to be able to withdraw about 4% of that million, and you're going to only be making about $40,000 to $50,000 a year. That's the usual spiel you're going to hear, and it's really bloody annoying because it's not at all a way to gauge retirement, guys. Okay, let me explain this in the simplest terms possible. Passive income is produced when you put initial work up front for something that is going to produce you cash flow into the future, whether you add hours of work to it or not. And the reason we do this is to increase cash flow. And the idea is once your cash flow crosses the line of how much your expenses cost, you are finally and officially financially independent, retire early. You've officially covered all of your bills, whether you go to work or not. That is when, in my opinion, you can say that you're financially free or you're able to retire or whatever. And you can do this sooner than I think people realize. If you're out of the stock market and you're not trying to make 4% on $1 million, because not all of us have $1 million, and it'd be nice to be making a decent income, but long before 65 years of age, what we would be doing is buying companies like this. We live in a beautiful world, guys, where we can set up systems, even regular jobs in the real world. You can hire people to run systems for you, and you can make income. So let's say you work 10 years and you save up a couple $100,000 and you start using that money to mitigate it into different businesses that are going to cash flow. So maybe you give your buddy down the road $100,000 to help start his mechanic shop, and you know he's going to be busy because he's already slammed with the clients he has, and he's going to pay you residuals, and you're going to be a business owner in that. Or you're going to take the other $100,000 and you're going to go on and buy a couple online businesses like this. So you're going to split $100,000 between some businesses online. You're going to give your buddy $100,000, and before you know it, you're going to be making like $5,000, $6,000, $7,000 a month in income without really working for it, even though you worked your ass off for the first 10 years. And then you're going to take all of this income you're making, and anything you don't spend, you're just going to put it into stocks and continue to make money. And oh my God, it's going to be like you're financially independent in your mid-30s. And anyone that tells you need to come up with millions of dollars before you can retire is just wrong. Now, obviously, this comes with risk, but the idea is once your cash flow is up that high, your risk is mitigated by your income month over month. So the idea behind that is, if say you've invested $200,000 and it's making you $4,000 or $5,000 a month, which sounds absurd, but trust me, it's possible, guys. It's more than possible. You're going to be able to invest. Say you're living on $3,000 or $4,000, or let's say you're living on $3,000. You're trying to be cheap, right? You're living on $3,000 a month, and you're investing the other $2,000 to $3,000 every month. Well, in a year, you're going to have invested another $30,000 to $50,000, which if you put that in stocks, you can start looking at a 4% gain, and it's just going to keep going up. And this is when the snowball effects happens, and you've constantly increased your wealth. And this is what we're trying to achieve here on the Passive Income Investor channel, guys. I'm trying to find a way to invest my money as smartly and as intelligently as possible without paying as much tax that I've been talking about, guys, because real estate in Canada is a friggin' nightmare. And I just found out yesterday that if I put money into an RSP, I can take a loan out against it. You don't pay taxes putting income into an RSP, but you can't withdraw them without paying penalties and fines and whatever else. But you can actually take out a mortgage on your line of on your retirement, your registered retirement savings plan, and to buy a property with it up to $25,000 on the down payment if you're a first-time home buyer, which is me. Now, I'm not going to be buying one of these $500,000 condos, mind you. I wouldn't mind finding a $300,000 one, but I wanted this came up today because I just really quickly wanted to show you this Ben Mala interview. I thought it was really, really interesting, and I think you guys might enjoy it. So just listen to this, and then I'm gonna have a few comments about it as well.
Very much, because I had a great fucking time in Canada. I finally went somewhere that I swear to God, I don't know about the rest of Canada, but Toronto and Niagara Falls, I don't know what it is. I think all the people that are there ran away, because Canada's known to be a place that you run to. You run away, and Canada lets you in. They're easy to get into compared to other countries or countries that you want to get into.
I mean, they border America, so they have to be.
It's like being in a nice America with a lot of European influence.
Yeah, everybody's super nice in Canada.
And you know why? I think it's all because they all came from a rotten place and they're happy to be there. Because everybody,
Where do you think they came from?
I'm not saying they're going to bend over and kiss your ass. They're not going to get over. But as far as the feeling, I don't know. It was a feeling that you got that you have your Arabs, you got your people from Europe, you got your whites, you got your blacks, you got all these different people. Nobody gives a fuck. Everybody's just doing their thing. Everybody's happy. Everybody's pleasant. It's like you were just around other humans. Nobody cared what your traditions were or what you did. Nobody bothered nobody. And the people are very pleasant when you do interact with somebody. And I don't know. I could never live there because the business, you pay a price for that, let me tell you.
Yeah.
When you want to live like them, you're going to pay. Their taxes are more than half. They have free medical care, and it's supposed to be good medical care. But you can't make it and hustle like you can here. I pay, in this country, we got all kinds of ways to avoid or defer tax.
Right. You can't do that in Canada?
None. They have none. They don't have all that deduction stuff and all that from what I heard.
Really?
No
they just- you
amortization,
pay. Everybody
no
pays.
depreciation, none of that.
But it's expensive to live, but it was just a very comfortable place to be. I can tell you that.
Who'd you go with?
I went with my wife and Frank and Jamie Chevis.
For a few things with you guys really, really quick about Ben Malin and what he thinks about Canada. First of all, we don't pay that much tax. We really don't. I think my tax bracket personally, you pay income tax is only 5.5% on the first 39,000, first 40,000 or something like that. And then I have to pay HST income tax as well. So HST is something I charge as a business, which is 13%, bringing my total tax payments on my working operating income to 18%. 5% income tax, 13% HST, 18%. That's not really that bad. And plus we get free healthcare on top of that. And plus we have also lots of ways for deductions as well. You can deduct real estate, guys. You can deduct business expenses. Like I've been saying, you can buy other things that cash flow for your business and not pay any tax anyways. The only time you really start paying tax is on a higher income. If you make more money and you collect that income and you keep that income and you're putting it into stocks or you're putting it into real estate, you are going to pay more of a premium. But here, Canada's actually a really cheap place to live. And what I mean by that, I mean things are affordable. The only thing that's not affordable is real estate. Real estate is crazy here. It's the only thing that's really staggering here, but we've had a lot of foreign, like he said, because you can see that we're kind of a melting pot. The people that come to this country, you're not leaving a third world or another part of the world to come here unless you have money. So the people that come here with wealth, and we used to have a big problem with foreign buyers that didn't even live here buying real estate like crazy, which is what drove our housing market up until the government stepped in and mitigated it. But real estate is what's out of whack, in my opinion. Again, we're looking at a condo, guys. Like, what are these? Maybe 600 square feet? Like, this is insane. Could you imagine buying 600 square feet for $500,000? You could make a van that has more square footage than some of these apartments do, I swear to God. It's kind of crazy, really. That's why I've been looking more in the U.S. because there's some tax implications. Like, you're going to be paying, I guess, what is it, a 15% over the border tax, because usually it's 30, but the U.S. gives Canada a break, and you end up only paying 15% on money coming from the U.S. to Canada if it's income. And then you got to pay income tax once it gets here. But when you're talking about saving, $200,000 or $300,000 on a home that you can rent out and make 6 to 7% on whoop-de-doo, the government wants 15% of your income. This is probably a lot for me to be spieling out. I'm sorry, guys. But I think it's really fascinating. I love Ben Malin. You guys should check out Koncrete channel. If you don't know this channel, definitely come check him out. It's kind of neat that he came to Canada for a bit of a break. Canada's an awesome place. I love it here. I just don't like the real estate, and it's pretty small, actually, compared to the States. To put it in perspective, guys, Vegas seems huge, right? Like Las Vegas. The entire population of Las Vegas is like Toronto's population. Canada's just not the biggest place ever. And it's really spread out, which I don't like either. I love Vegas because everything's so close. The airport's right there. You get off. Everything's within a drive's reach of 20 minutes. In Toronto, everything is like an hour away from itself because of traffic. I'm already an hour out of the city, so if I get caught in rush hour and I have to come home, I mean, we're talking I ain't getting home for like 3 hours. It's friggin' insane here, guys. It has its ups and its downs. The medical care is the best part. We do have free health care we don't really pay for. It comes out of our taxes, obviously, but it's not like an extra tax. It's just, again, you pay your regular 18%, or if you just have a job, then you just pay whatever your regular income taxes. It just goes toward the healthcare. That's the only good thing about Canada, guys, is that healthcare. I love that aspect of it because you guys pay a lot in the U.S. and I know a lot of you are U.S. Watchers. I hope you guys enjoyed this video today. It was a lot to go over. I kind of rushed through it. Hopefully I got the good points across, and I hope you enjoyed this really neat video. I enjoyed making this one today, guys, so stay cool. I got lots to do. Stay awesome. I look forward to chatting to you real soon.